Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 16th of March, 2017. Getting on to 3:15 in the afternoon. That is Central Time, PM, obviously. Well, basketball's begun, and I know in my office they'll all be having on the Northwestern game. First time there. We'll find out if they can go to the second game or not. Notre Dame, whew, what a tight game. That gives you an idea what traders were looking at today, but I can tell you it's in the whole building. I was in the trading pits 10 minutes ago. I was on Sky Biz in Australia. And yes, I do TV shows all over the world, actually. And to make a long story short, every pit's got on different ball games. Amazing what it does. But in looking at where we're at, you're down at the lows of the day in the dollar index. You've had a nice little rally in foreign currencies against the dollar. It's been the Goldilocks rally after the Fed announced the rate hike and saying that there'll be at least 2 more this year. Interesting. And the dollar breaks on that news, and you get a heck of a rally out of all the metals. Where do you think these metals stopped? Remember, if you're a regular viewer, we talk about that line in the sand, that 18-day average of closes. Let's first look on the way down on a weekly chart. Market was coming down, hits the combination, and the word is combination of the 100-day average, the 18, found its support, and it's bounced away. Now it's up $25 on the week, and right from that area, it's more than that at this point. Let's take a look at an area chart of just closing prices on a daily chart, not the weekly. The low is now 1200.7, and we've rallied through this little area. So I can mark that now as an uptrend. I do that because when I look at the daily bar chart and add the first study called a swing line, let me come back to it right here, you get the pattern of higher lows and higher highs. That is most definitely an uptrend. So now when I do that, I filter the swing line with the 18-day average of closes. That's the red line. Look where it hit, what it's done. I would not be surprised that between here and the 100-day average, the market starts bouncing around. Doesn't have to, but what do you have right here with this type of action? You got higher lows, higher highs, hit the 18-day average, and have been stuck against it. When we add Bollinger Bands, you move to the right-hand side here, but it was yesterday that this whole thing caught on fire, and today it's the follow-through. Now the question is, does it have muscle to keep going, or is it just going to back and forth? You had, and I want to show this, on Wednesday, even with the close, you had your embedded reading. You lose it tonight when the red line closes back over 20. To get it back, the only way it can get it back is tomorrow on a big break where it gets under there. Otherwise, what takes place is when you lose an embedded reading, a market switches back from that to oversold. Oversold markets typically get out of that condition with either a rally or chopping action to the side. We'll see which one this wants to do, but that's why I'm pointing out the 100-day average in the 18. When you go to the gold ETF, big move out of the embedded reading. Look where you stopped. I mean, it could go further. Why isn't it? So many people look at these numbers, and that's the important part. Here you are in the gold miners. Now, the good news in the gold miners is that you've had a heck of a nice rally, and you've managed to close over it, and now you've brought together the 18 and the 100-day. Are they going to be able to stay together? What's going to happen? I don't know. You still have a pattern of lower highs and lower lows. If you take out today's lows tomorrow, and if that's under the 18-day and the 100, you might get fresh selling in this market, just for the reason that I'm pointing out here. So we have to keep an eye on that. The gold-silver ratio, and this is a daily. I was showing it for a while on the weekly, but I think you get more out of it. You've had an upthrust, but now look at how this is sinking in. I can now argue well, I want to see the settlement prices today, but I can now argue that this upthrust is gone until you take out this high again, and we've seen the correction from 67.60 to 70.99, and now the market heads back with silver possibly gaining on the gold. As you can see here on the silver chart, couldn't quite get up to that 18-day average, but if the market's going to continue up, where do you think the next resistance point is? I'm going to argue it's right there. Where's the support point? The 100-day average, and you're sort of stuck in between the two. What else is negative on this chart? You didn't lose your embedded reading. If this market starts down through today's lows tomorrow, it could pick up even more momentum. In plain English, I am not enamored with the gold and the silver yet to the upside. I question if that wasn't just a lot of short covering in the market, and that's what you got to be a bit careful about. Give you another example of a chart that could be strange here. In the copper, if you get back under the 18-day average, you could end up with this high being a lower high. You've got lower lows under the 18-day average. That's an all-out bearish signal. This is a very important area, and the market stalled against that 18-day average as it's trying to figure out what to do. We then get to the platinum market, which has still got an embedded reading. I tell you, be careful here. This market is not saying it's ready for the upside. Where did it stop? The closest of the main moving averages, the 100-day, and then above it's the 18. I don't see this market as ready to go. A better looking chart is the palladium, but it too has got an issue. I need to be certain it closed over that 18-day average. At least then you could argue higher lows, higher highs. What I don't like, if you were to buy it there, you've got a heck of a risk of $26. It's a lot of money in this market. Back under this low to get knocked out as a stop. If it stayed over that 18-day average, it could be headed up to that 792 area, the upper Bollinger Band. Momentum in this market has turned to the upside. It was never embedded. We then get to the dollar index, and look at how this has plunged through the 100-day and the Bollinger Band. Now, let's go to yesterday. Yesterday, the market finishes at 157. Which is above the Bollinger Band, but below the 100-day average. It extends its break today. So we're the first day under the lower Bollinger Band in an oversold condition. The odds do not favor it continuing, but it can. Why? Because at least you got the swing lines with lower highs, lower lows. Tomorrow's going to be an important day. Is there anything on this chart that can turn the chart bullish? Flat no. Even if you got over this 101.60, you've got a lower low, and then you'd have a higher high. There's nothing here. The bears are controlling the market, but it is oversold. So I look at all that on the metals, and I question what's going on. But I guess as long as the dollar stays under pressure here, why wouldn't the metals find some support? Now, what about the seasonals? Where do the seasonals kick in, be it this time of year or next month, that normally carry the metals up or down? Well, the Moore Research Center puts together ideas on that. And what they do, they go back and they look in their computer records as to different days. There's 365 days a year. There's X amount of trading days. If you bought on a certain day, got out on a certain day, did that work at least 13 out of 15 years? If it did, they publish that. Does that always work? Well, there's always parts going in, parts going out. So not always. Are some markets better than others? I, after using this for decades, yes, decades, you can ask them how long I've been with them, the answer is you got to learn to work with it. It's just another tool. When you first see it, you're going to be inclined to say, oh, this is great, I'm going to buy here and go right with them. Their own records say that's not how you use it. Their disclaimers say it. Make sure that your technical indicators are going with it. It is but a tool. You can even go back and say, what do the last 30 years look like? Because it's interactive on their website. What do the last 5 to 15 years look like? You can break your times. What does a bear market look like in seasonals? What does a bull market look like? What should they do? You can interplay with all this. That is the beauty. It's another tool, but it is not something that I would ever tell you to buy, just buy and sell off of what they've got. They'll be the first, I think, ahead of me to say that as well. So you're going to get a user ID, a password. You're going to be able to get in and manage your subscription. You got a couple weeks subscription, which is enough to see. A couple of months of trading, how they do for you. You can print stuff out. Pretty cool. How do you get this? Well, it's simple. Give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. You can click up here if you're watching me on YouTube, because you'll see that icon. Just click it, or under us on many websites. Just click here. It'll say do so, and the form will come up. Take it from there. I'm Ira Epstein. You have a great day.